Hey, everyone. Welcome to a Wednesday, the Entrepreneurs Hangout podcast. And I am here with Chad Jeffrey. And this is season 3, episode 6. We are rolling along, singing a song, and we love to talk about business. So, Chad, I am so grateful for you to be here. I really, really am so glad that you took the time, and I'm excited for you to talk to my audience and our audience that we're building. So, tell us a little bit about you and why you love to talk about everything business.
Oh, sure, absolutely. Thank you so much for having me, Kylie. I really appreciate it, and love doing stuff like this. And I can wax poetic about business and entrepreneurship for a bit. I'm a fractional CFO. I'm a partner at Petrichor CFO, and we do everything from your basic bookkeeping to complex tax strategy to CFO services. Once we're really ready for that as the business, right? That's going to take a bit. And like why I'm passionate is that's pretty simple. I grew up in a very entrepreneurial family. Like I could go on about, oh, I did this in college, and I had some great professors and great mentors throughout my career. But really, for me, it was like my grandpa and my mother were always entrepreneurial, and so I grew up along that. And I was definitely like had a first row seat as a little boy growing up to like the waxes and wanes, the success and the failures of business, right? And the risk and the reward. And and let's face it, like going into business, putting yourself out there, that's what business is. Like here's what I can provide to the market. What do people think that's worth, right? And I'll always remember, like going on awesome Orlando, all the Disney parks, vacations with mom and, my siblings. And that was great. But by the same token, I remember, sitting there as a little kid trying to go to sleep and listening to mom haggle with vendors and cry and, be frustrated. And, I think after all that, you kind of take a step back. And I knew from a pretty early age I wanted to be an entrepreneur, but that I really wanted to be able to help those people,
Yeah.
because obviously, like Disney World sticks in my mind, but not as much as watching my mother cry, you know,
Yeah.
on the phone,
Yeah.
fighting for the family, fighting for the business. And so that was like a really big impact with me. Um, and like if
I
I
like
could
that though, Chad. I
alleviate
like
that
that.
and help other people.
No, if you alleviate it,
Well,
it
thank
it
you.
takes you
Yeah,
out of yeah. If you alleviate it, it takes you out of exactly the lessons you learned. We call them the school of hard knocks, but that's what brought you where
absolutely.
you're at right now.
Yeah, yeah. And so like anytime I ever talk with any entrepreneur, regardless of if I can help them or not, and I'll throw out a bunch of free information always, because like I'm very entrepreneurial spirited, and it's like what are your personal goals? Let's always start with personal goals, and business goals should reflect our personal goals. Like your business should
Amen.
help achieve that, right? And so if I can help your business, like what am I helping? I'm helping you achieve your personal goals. Like if we filter that down. And most people's, personal goals, like what are those things? It's like spend more time with family, be a better parent, go on vacations I didn't get to go on, get to a better school district, pay off the house, retire early, grow, hire more employees, help more people. I mean, provide a better service, dominate the market, through like competitive advantages. Like that is all those things ultimately like make people's lives better. And so, it
Yeah.
is very difficult, I think, to go out and like directly affect, say, like 100,000 people, right? But if you're affecting, if you're having a positive impact on businesses and business owners, and they're all helping in, providing services and providing goods that make people's lives better, well, indirectly, you can easily affect 100,000 people, you know? And so that is like, that's a beautiful, beautiful thing, and to like sit back and look at the impact you had is crazy. I used to own a restaurant, and I'd probably say 70% of my clients, at least started off in like food and beverage, right? And
Hmm.
when you look at it, if I say, hey, what do restaurants, bars, wineries, breweries, nightclubs, what are all those places doing? And if you get into the nitty gritty, it's like serving drinks, offering services. Like, no, no, no. It's like you are providing an experience.
Yes. Yes.
Like that's the
Yep.
grand, you're providing an experience. And if I can help you provide a better experience and I can make you more lucrative and you can open more places and you can do this and expand and get to where you want, right? And hire the best people, then I'm helping you provide better experiences. And that means that every night when people come in, I'm not responsible. I'm not 100% responsible. I might be 2 to 3% responsible for that. And that means that like I get a, have an indirect impact on everybody's experience there. And that's really, like I said, as an entrepreneur, when you step back, that is like an amazing, amazing thing,
Mm-hmm.
and you
Yeah.
can't have a bigger impact than that. Like, I mean, if you can, let me know, let me know. I'll switch careers, but
Yeah.
I don't think you can. So
Well, I love that. And so,
yeah,
it's
as long
funny,
as that,
Chad.
that's the problem.
We didn't get a chance to talk a little bit about this though. So we've got some similarities there where I grew up very entrepreneurial. My father was a self-made home builder in Arizona after retiring from the military. And believe me, my dad had his hands in every cookie jar. He had businesses left and right, everything from, we sold vegetables. I mean, it was crazy the stuff that my dad did. And my mother was super supportive. I mean, she was just part of it as well. They had a cleaning business. They had, lots of stuff going on. But I was very entrepreneurial. And so way back in like the 80s or so, I say to people, it's so kind of funny because it's like my only real job, supposed real job, was I was a bartender, cocktail waitress, and a restaurant manager for a Cajun restaurant in Phoenix. And I'm like, I liked it so much that I bought it, right? So I bought the restaurant, and
Wow.
you are right about the experience part, which is, people like, I'm just going to we can use restaurant as an example. You can get good food and almost anywhere, right? You can go get good food, good whatever. You can
Yep.
get drinks like that. But people come back for the experiences. People work with Chad and Kiley because of the experience that they get from it. Now, we're not serving up food right now. I don't know, maybe we are, but
Yeah.
it's the experience and what we do with them that makes a difference.
Absolutely, absolutely. And that's funny that you bring up a Cajun restaurant. That was not my first restaurant job because I started in restaurants when I was about 14. But it was probably like my first, like big boy on the line, really pushing out a ton of food in Lincoln, Nebraska, just at a Cajun restaurant, and that was probably where I really cut my teeth on restaurants, that in a barbecue place. And yeah, I mean, it was all about it though, because yeah, you're 100% right. It's like you can go find good food. I mean, that's specifically restaurants, but just about every industry. It's like, look, you
Mhm.
have all these cogs and wheels that are moving to like, if we think of our business as a machine, and in order to provide like what you're trying to do at a high level, everything has to be moving correctly in tune, and like managing people and getting what you need from people in probably all facets of life, but especially business. Like that's one of the biggest outliers, right? The most uncontrollable thing is, are people going to show up on time? Are they going to be in a good mood? Are they going to
Mhm.
offer good service? If you're trying to get new places, it's like, what banks are we working with? What financial institutions are we working with? Are they going to be able to deliver timely when we need them to? What type of back to relationships, what type of relationships do we have with these people? Because that's definitely something that like I'm fairly extroverted, especially for an accounting finance nerd. But
Ah,
when we go out and look at stuff, it's like it's all about relationships and who you know, and especially, I mean, with anything, but especially when you're dealing with people's money, it's about trust, right?
mhm.
Like I have people reach out all the time about like, oh, we're looking for, do you want to be a referral partner of ours and this and that, and usually I'll hear you out, but
Sure.
I tell them it's like, look, I'm fickle about like who I trust. My number
Right.
one core value and my firm's number one core value is like we protect our clients. We protect our clients. So that is like we're going to scrutinize you heavily. We're going to ask a ton of questions. Probably
Right.
going to send all the documentation you send us on to an attorney. Like, if it doesn't match up with our core values, then that's a no. Even if
Yeah.
you're promising the world, like, because it's so relationship heavy, right? Like, in business in general, so relationship heavy. So,
It
and
is. It
and it
is.
yeah, and it takes a long time to build that, and it doesn't take very long to tear it down. So,
No. And it takes it, you don't get to, you don't trust somebody in a day or so. You have to build that rapport. You have to do your due diligence, and you have to like, for me, I have to like the person. If I don't like them and enjoy this
yeah,
experience, this journey, I I just clock out. I'm like, I just can't do it. If I don't enjoy you, I'm not spending time with you.
yeah, absolutely. There, and the more you network and the more you get out there, and like we have clients across the country, right? So at first, when we first started, it was like, oh my gosh, any and everybody, we got to let in the door. We got to try to help them and save
Yeah.
everybody. But as yeah, right. But as you move on and you become a little bit more veteran and you just understand what you're doing, not necessarily at an operational level, but more at just like a very like 30,000 foot, business owner, not business operator level. It's like, look, there's lots and lots of opportunities to work with people. And a bad client and a bad, working with bad people that don't align with you will ultimately cost you more time and more money than,
Right.
just moving on and finding somebody else. Right. And I mean, like I said, I'm a numbers nerd. I love measuring metrics. Kylie, if you said, Chad, pull up a spreadsheet, show me KPIs, I'd be like, hold on, get ready.
Yeah.
But one of the metrics that's really hard to measure is like, what's the value of lost time? Like, we all know it's invaluable, and we all know
Yep.
time is money, but like, I'm not good at measuring that. Lost time, that's a hard thing to measure.
Yeah.
One, we don't track it, but I promise it has a cost. I mean, I promise it does.
Well, and it's funny,
And it's a big cost. So
you and I were talking just a little bit before we started this about, where really honestly, we can put it we can wrap it up in this way, which is I'm an entrepreneur. I am not a bookkeeper. I am not an accountant. I am not a detailed person, right? So the last thing I'm going to do is do my business's books. That's the last thing. So I'm going to go find
yeah,
somebody that I
yeah,
know
absolutely.
and trust like you.
Yeah, absolutely. I mean, like, I think before we went live, I said, I've never come across anybody that was like, like your father, right? Like, I want to build houses. Why? Well, I want to do the cost accounting when I get home. I can't
Yeah.
wait for that. Like, how much money did we make on this house build? Or the restaurant guy or the food truck, people, or the lady who opens up a bakery, they're not sitting there after a 12-hour day like, all right, let's figure out cost of goods sold and labor
Right.
percentage. And like, did we keep those under 60%? Did we make money today? What are our break evens? Like nobody, unless you're going into accounting and finance, right? Like nobody wants to sit there and do that. It's not like people get into business because they have a passion for something,
Hmm.
because they want to make money. There's a lot of different reasons, but usually they're pretty good at the operations part of something, and the administration part of things we're not so good at because it takes training and
Right.
skill. And I tell entrepreneurs that all the time. I'm like, when you have the money, buy back your time.
Yeah.
Buy it
Yeah.
back. Like, when you first start, yeah, you're going to do your own books. You're going to do your own marketing. What do you not like to do? What are you worst at? What don't you like? You don't like marketing? You don't like being on social media? Great. Like, that's awesome. There's thousands, tens of thousands of people that will help you market, that you can hire fractionally, outsource. You don't like them, you can get rid of them pretty quick. You can do cost benefit analysis. You don't even have to do it through a spreadsheet like I would, but you could, kind of do that in your head,
Yeah.
figure out who vibes with you, and then buy your time back. And I promise you're making money on that. I promise you're making money on that. Like,
Yep.
your time is
Yeah.
very, very, very valuable. And if you are awesome in operations, then that's probably where you should focus, at least till you're ready to grow.
Yeah. Chad, it's kind of interesting. So we talked a little bit about my business called Business in a Box, and I help I help people, the
Mhm.
underserved, typically the underserved entrepreneur, start a service-based business because, in my opinion, all the smaller entrepreneurs that are looking to scale and grow, they really struggle with, all right, do I have the experience? Do I have this? And I'm really now, I've got a flagship program that's into the prisons and the reentry team, especially. They get stuck with these minimum wage jobs and they're never going to get financially independent unless they have a business of their own. So I've developed some service-based businesses, and bookkeeping is one of them. And you said it right. It's like talking about to people where how much their time is worth. But I think I'd like to talk a little bit about what is a CFO. And I think that this is important because, like, my entrepreneurs, whatever level
Sure.
they're at, they might have, a financial, a CFO that actually works for them if you're big enough. But talk just a little bit about your fractional CFO services.
Yeah, of course. That's a great segue. Thanks, Kylie. So I've always said, like, when we just start off with basics, like, a lot of times when you're hiring at a lower level, like your just normal accountant, right? They'll say, hey, accounting or finance. And in a lot of industries, a lot of different companies, they're used fairly interchangeably. And so, one, I would say accounting is looking at right now and back and counting everything, like literally counting and categorizing everything, And then finance is looking at right now and forward. So we're projecting out forward, right? And normally, like your big businesses, your large, firms, they can afford CFOs, but CFOs are probably between two, three, $400,000. A lot of times they're taking
Mm-hmm.
equity as equity partners. And it is, not like most CFOs don't want to be in the nitty gritty, right? Like they don't want to reconcile the bank. They want to have very clean financials, be able to look at those, be able to either run metrics or just receive metrics, and then talk with the rest of your C-suite, talk with your leadership team,
Mm-hmm.
and say, hey, okay, according to the CEO, according to the stakeholders, according to whoever, we have promised these certain goals. Like here are our goals as a business. And I think before we started, I said, if you're, you know, partnership or what have you, like you should definitely sit down and be like, what are our personal goals? What are our business goals? Business goals reflect our personal goals and help us achieve those. And so when we look at business goals, it's looking forward and saying, hey, based on the metrics we have and the historicals we have and what we think is going to happen in the economy and in our industry and in our local area, what do we need to do to achieve that? Like and maybe it could be something as simple as like, our cash flows are wrong. Okay. And that's like probably your step one is like, do we forecast out our cash flows?
Mm-hmm.
Just as like something that I always like to do. Like once we know theoretically what our cash position should be, I'll usually do like a 13-month and a 13-week. And these should revolve at least monthly. At least monthly when you get financials, which should be your profit and loss or income statement and your balance sheet, right? But you should also have a cash flow forecast because like if you're a business owner, you've never seen a cash flow forecast or a cash flow summary, like that light bulb, I promise will go off because you'll look at this and you'll be like, this is actually what I've been needing. Like this is helping me make decisions. The P&L is
Right.
great, but if you have a monthly P&L and you're sitting there and you're like, well, heck, labor is 45% of our total sales revenue. And it's like, okay, great. That was this last month. You're
Yeah.
probably not getting those on day 3 of the new month. You're probably getting them on, day 10 or later. Uh, and so how do you fix that in that time period? Whereas like your cash flow forecast is like, hey, here's where our cash position is. Here's everything we're paying, including debt payments, vendors, payroll, whatever you're paying, whatever your cash outflows are. Here's where we should be at the end of the week, and then it just repeats that for 13 weeks. And so now all of a sudden you can start to look at stuff like if this piece of equipment is acting up, you know, do we replace it? When's a good time for us to replace it? Hey, we need to hire people. Should we hire? So it really, really helps with decision making. And then the other thing that like your CFO should be doing is they should back out and be looking at your, KPIs, which are your key performance indicators for your industry. And I've always said, like, for me, I track a lot of KPIs, a ton of metrics. I like that stuff, but I don't present them all because they're not like if it's not out of whack, there's no reason to focus on it.
Right.
And in the C-suite, it's very easy, and maybe it's just a CEO I'm talking to, which is often the case, right? But it's very easy to kind of get sidetracked and have them be like, oh well, my inventory turnover rate, it's higher than I want it. It's like, yes, I understand that. However, like the average amount of money our customer spends has been dropping like a rock, and that's really where we need to focus. Like I know you're
Right.
where like you can get stuck on a metric. So yeah, it's measuring metrics that basically drive net profit, right? And because business goals in general have to do with, being more lucrative, making more money, uh, in general, like if you want to grow, you're going to need more money, you're going to need good financials. If you want to put more money in your pocket, if you want to hire more, like however that looks, in general, it has to do with driving net profit. And so that's really what CFOs are doing, but they're doing it at a very high level amount of strategy. Where the end,
Right.
like for me, I have 15 plus years in restaurants. I was an owner operator. Um, so for me, it's like, hey, here's, not just we need to fix this, but like we need to fix this. Here's how we should do it. Like this is the
Sure.
strategy we should implement. Now, like I don't necessarily fly out to all my customers across the country or my clients across the country and say, look, guys, I'm going to come in and show you how to do this. No, no, I'm like, here are things that have worked in the past. Here's how we control these
Right.
metrics. These are things we need to do. And for like any industry, right? Like you should measure marketing. Like what does it cost for us to acquire a client? In
Absolutely.
average, before we lose
Absolutely.
that, yeah, right. And then when if we're going before we lose that client, because a lot of clients and customers like eventually leave, like they outgrow you or they leave the area or what have you. But about how much do they spend? Like, what is our return over time for every dollar we put into marketing? How much are we getting back?
Hmm.
And
So,
if you really want to scale, you need those numbers.
yeah.
Sorry, go ahead.
No, that's all right. I've got one question before we wrap it up. So it's like, okay, now we've talked about the CFO position and like that's, kind of like down the road. If you had to say to somebody that's an entrepreneur, what do you do to set yourself up for success in the first year? How do you start down that so that you are setting your book? And I'm talking about bookkeeping. I'm talking about what to look
Yeah.
for, maybe how to set that up for that first year so that they're not overwhelmed, but they also don't mess up.
Yeah, that's a really good question. And like we could go industry specific with that, but if we just step back and say for all businesses, right, what should we do? Like I would say when people say write a business plan, it's like, yep, it's great to conceptualize and it's great to do this, but forecast out your cash flows. And this isn't a fun or easy process again, unless you're like in that field. But look and I would be extremely conservative with revenue,
Mhm.
be very aggressive with your expenses, like overstate your expenses. I like to do scenario analysis where I say, hey, if revenue is 20% less than we think it's going to be, and our expenses are 50% more, is this business still viable? Right. And then
Yeah.
do that for, preferably at least 12 months, preferably 36 months. And then look at it and realize that the further out you go, the more inaccurate it's going to be. Like I do this for a living. It's not accurate for me most of the time after 36 months. It just isn't.
Right.
There's too many variables. But do it, and then based on that, you can plan. Hey, here's where we want to be. You can come back to this plan once you start operations 3, 4 months in. Say, like, what does this look like? Do we need to adjust it? We kind of have a template for moving forward. Again, it lets you know your cash position, and everybody knows that cash is king and cash flow is queen.
Yep. Yep.
So we can adjust our cash flows on the fly. We know how much cash we have. And, I mean, if you have, you know, $2,000 to $5,000 problems and you have $30,000 to $40,000 sitting in the bank at all times, like you don't have a lot of problems other than timing, right? Whereas
Okay.
if you haven't looked at that at all and you're like, oh, I didn't realize this could happen, and when you forecast cash flows, do your research, like go out, talk to other business owners. Look, the internet is great for this. Like look at Google, reach out. I mean, heck, like there are people who will reach out to me all the time. They're way too small to be clients of mine. And like I won't necessarily give them like 2 or 3 hours of my time. But if they're like, hey, I have a couple questions, they message me on Facebook or LinkedIn, here's my 3 questions. Absolutely, I'll answer them because ultimately I want you to be successful. And if you start hitting grand slams, you're gonna be like, hey, that Chad fella, he kind of helped me out here. And you'll come back to me as a client. And even if you don't,
Yeah.
like I want you to be successful. I want that.
Yeah.
So yeah, forecast out your cash flows, do it for 12 to 36 months. Remember, conservative with our revenues, like understate revenues, don't be an optimist, you know, overstate our
Yeah.
expenses, and then look at that. And and when things go negative, like don't be scared. Ask yourself, can we survive this?
Right.
You
I
know,
love that,
and
Chad.
when you're,
It's reasonable. It's so reasonable, and it's hard for entrepreneurs to do that, to be conservative, because they always got the pie in the sky. They've always got positivity. I know I
oh
always
yeah,
do. So but you've got to be
yep,
able
me
to be
too, me
reasonable,
too.
right? Yeah, that's awesome. That's awesome. Well, Chad, this has
Yeah,
been
yeah.
amazing.
It's
Thanks so
you wouldn't
much for
you
all
wouldn't be
the really great advice.
absolutely, absolutely. I mean, you wouldn't be an entrepreneur if you weren't optimistic and a risk taker to some extent.
Yeah.
So yeah, of course, Kylie, thank you so much for having me. It was great getting to know you and your background as
Yeah.
well. So
You got it. Thank you so much, you guys. And the show notes will be there. You'll have Chad's information. You can ask him some questions. And Chad, keep us posted with anything you've got going on, courses that you might be giving, or anything that's going to be out there to help the entrepreneurs. That's what
sure,
we're there for.
awesome. Thank you so much.
Thanks so much for now. All right, you guys, this was, we're going to wrap this up. You remember, same time, same place, next week, Wednesday at 3 EST. And if you want to be a guest on my show, all you got to do is hit me up and let's schedule it. Thanks a lot. Bye for now.